Right then, on to task 4 then, which is worth 15 marks. And we'll test your knowledge again on ethics and on final accounts preparation. It is another written task, which means it's human marked. It's split into multiple tasks, so it's not one large written task. It will be split up, which makes things slightly easier or slightly harder, depending on how you want to look at it. But overall, nothing to panic about. Let's jump in and have a look at the first scenario. This task is based on the workplace scenario of new place. Today's date is the 28th of February 2018. You help to record invoices from new place's suppliers and also to make payments to them. You know that all phone calls on the new place office phone are recorded. DJ Furniture is a supplier for New Place. Janie Green is the finance director at DJ. She has telephoned your office several times during February. Each time she has said that DJ has cash flow difficulties and asked you when certain large invoices will be paid. Each time you have replied that invoices will be paid when they become due, in line with New Place's procedures. On the 21st of February, you received a call on your private mobile phone from Janie. She offered you tickets for an expensive event. You said you weren't sure if you could attend and ended the call. On the 27th of February, you received another private call from Janie, demanding that you immediately pay an invoice that was not yet due. She said that if you refuse, she would tell Mo that you demanded expensive tickets for her in return for making early payments. Part A then, I. Describe 2 threats to your ethical principles from Janie's actions. So there are 2 clear threats here. The first one occurred on the 21st of February, and this would be when you were offered the tickets initially. Now at that point, that would create a self-interest threat. Because you're being offered something by a client as some sort of incentive, that would describe or conflict with a self-interest threat. So in threat 1, you can select on 21st February, there was a self-interest threat created. This was caused by Janie offering us tickets to a show. Threat 2 then was created on the 27th of February. So this was the second private call you'd received from Janie. Except that on this one, it was to your personal mobile. And she said that if you refused, she would tell Mo that you demanded expensive tickets. So this would then change from a self-interest threat to an intimidation threat. She's saying that if we have refused to do what she's asking to do, she will explain to Mo that we have demanded expensive tickets. So what we do is on the 27th February, there was an intimidation threat created by Janie, threatening to tell Mo that we had requested expensive tickets in return for making early payments. So that covers the 2 threats. It is worth noting, just to say, you do have the threats over here in this little blue panel. So this is something that you get in the exam as well. So it just lists out the different threats, although truth be told, you should probably know them by now. But if for whatever reason you forgot, it's been a while since you've done them, they are available to you in the exam, along with the ethical principles And if you want any further context to the scenario, there is this pop-up here, which is just at the top where it says scenario context data. Anyway, back to the question. So part 2 then says describe 2 actions you should now take in order to work within the ethical code. So let's just scroll down. So we need to think of 2 actions. So action number 1 that I would go for, it's usually quite a safe bet, is decline. So firstly, I would say decline Janie's threats and continue to pay as normal. So that would always be my first port of call here. I would always say to, within these sort of questions, put that you wouldn't do what you're being asked to do as a starting point. The next one, which is usually a fairly generic yet safe option, is to follow any internal procedures that the business has. So follow any internal procedures on how to deal with threats to your ethical principles. Type. Alongside this, and this is your other safe bet as well, again, it's quite generic, but it works every time, so it is one that I would highly recommend. So alongside this, I would raise this with my manager. Obviously, just to say, it wouldn't work if it was your manager that was actually causing the issue in the first place. Please don't put that in an exam. But if it's not, then always raise it with my manager or someone higher up within the business. And that covers threat 1, threat 2, action 1, and action 2. So let's move down. Your role at New Place includes supporting sustainability throughout the business and measuring sustainability in the business. Give one reason why sustainability is important. Well, we have multiple reasons for why sustainability is important, but we just need to highlight one. So we know that there are 3 trees to sustainability. So we have economic, environmental, and social. So anyone we could give as a reason why sustainability is important, but the overarching impact that sustainability has is that what we do now is supposed to improve or make way for future generations. So I would go for something on the lines of social, economic, and environmental sustainability are 3 areas that we work on in the present to improve future generations and provide growth for the future. Moving down to part C then. You receive the following email from Mo Hussain. Hello Chris, I know you are finalising the statement of profit or loss and the statement of financial position for New Place for the year ended 31st December 2017. I would like to know more about the accounting principles they are based on and how the 2 statements link together. Also, an accountant friend of mine was telling me about the fundamental qualitative characteristics of useful financial information the other day, but I didn't understand. Sounds like a cracking conversation that Mo's been having outside of work, but no judgment, so we keep going. I would like you to do the following. Number 1, describe the 2 key assumptions that underlie the preparation of financial statements using a relevant example in each case. Number 2, describe one of the two fundamental qualitative characteristics of useful financial information. Number 3, explain what the statement of financial position tells me. And number 4, explain one way in which the statement of financial position links with the statement of profit or loss. As I am not an accountant, please communicate your responses in a clear manner. So part C then, reply to Mo addressing all 4 points that he has raised, and it is worth 10 marks. So obviously we will get roughly 2 marks for 2, 3 and 4, possibly 4 for part 1 because it's 2 key assumptions. So let's start with the subject, which is slightly ironic really because you're replying to an email that has no subject. So, okay, anyway, so for that I would just go with something on the lines of reply to Mo on accounting questions. Any suitable subject, you will get the marks for there. Right, so what we need to do is just set out an email to start off with. So if you are really short on time, just bullet point it because you'll still get the majority of the marks. But if you do have time, I would recommend writing it out as an email. So something along the lines of, "Hi Mo, thank you for your email. Please see below response to your questions." So nothing complicated, but it just starts it out as you would do in an email. Going from there then, let's address each point. So describe the 2 key assumptions that underlie the preparation of financial statements using a relevant example in each case. Well, we do have 2, and they are the going concern and the accruals concept would be your 2 key assumptions. So let's first tackle going concern. The first assumption with regards to financial statements is the going concern concept. So the going concern concept assumes that the business will continue to trade as normal for the foreseeable future. Some would argue that it just needs to be for the next 12 months, but just to be safe, I would go with just the foreseeable future. So that would be such as not selling off part of the business, not closing down the business, anything like that, because your financial statements are prepared in a slightly different way. So if your business is a going concern, then you would expect it to trade as normal for at least the next 12 months, but realistically for the foreseeable future. The second assumption then is the accruals concept. The accruals concept states that income and expenditure are recorded in the period that the goods or services take place, not when the money was paid or received. Right then. So that covers, just to say, that covers point 1. Point 2 says describe one of the 2 fundamental qualitative characteristics of useful financial information. So we have 2 on offer. Obviously, it says 2 fundamental qualitative characteristics. We just need to describe one. So really we can pick here. So we have faithful representation or relevance. Tough choice, but I would probably go with faithful representation. So let's try and describe faithful representation. One of the 2 fundamental characteristics is faithful presentation. This describes, or this states, should I say, that all information is entered within the financial statements, i.e., they are complete and free from error. Excellent. Right. Moving on to part 3 then. Explain what the statement of financial position tells me. So the statement of financial position shows all the business's assets and liabilities. It also shows the capital of a business. The equation for the statement financial position is assets minus liabilities is equal to capital. So effectively, it shows what the business is worth, as it shows what the business owns and what the business owes. Excellent. And that covers what the statement of financial position shows. And that just leaves number 4. Explain one way in which the statement of financial position links with the statement of profit or loss. We've probably got 2 options off the top of my head that I think here, and that would be closing inventory, because that goes in both, or profit, which I would probably go with profit. So one way in which the 2 financial statements link is profit. This is calculated within the profit or loss and is then transferred to the statement of financial position within the financed by section, where it would be added to the owner's capital account. Excellent. And then all I do is just sign it off. So, regards, Chris. And that's it. Okay, so we've not had to write pages and pages. We've taken each point. We've covered it fairly concise, but this is only 10 marks, which I appreciate may seem like a lot of marks, but when you're splitting it out into 4 different points, you really don't have to write loads to pick up all of those marks. So I hope that has given you a little bit of confidence when writing out the written questions. They are honestly nothing to be too nervous about. Take each point, use the information that's available to you, and try and stay fairly concise. Right, that covers task 4. We can now move on to task 5. Right then, and on to task 5, which is worth 12 marks and assesses your ability to answer questions on management accounting information. So these are the type of questions that you would expect to see when you were doing your management account costing unit. Overall, it is quite a well answered question according to the examiner's report. So let's work through it. So this task is based on the workplace scenario of new place. Mo Hussein has asked you to help update the budget. The data below is the current budgeted performance of New Place for the 6 months ending the 31st of December 2018. The original budget was for 10,000 units. The original selling price was £165 and the original cost was £125. Mo has suggested the following changes: sales volume to increase by 10% and selling prices to increase by 5%. Then, complete the following table to include the suggested changes above. Show your answers to the nearest whole pound. So what we need to do here is take the information within the question. So we have original budgeted units of 10,000 and the original selling price of £165. We need to amend these for the below changes, which was sales volume to increase by 10% and the selling price to increase by 5%. So let's start off by doing the sales volume increase. So the original budget was for 10,000 units. So to increase this, we basically just need to add on a further 10% of this figure. So you can do that in different ways. You can divide it by 100 times by 10 and add that figure on, or probably the easier version, which is just to times by 1.1 because you're increasing it by 10%. Either way is absolutely fine, but by doing that, we should get a revised budget in terms of units of 11,000. So rather than selling 10,000 units, the plan is to now sell 11,000 units. The next part then is to increase the sales price by 5%. So again, you can either do this by dividing by 100 and timesing by 5%. The way I would tend to do it is take the selling price, which it's given as £165, and multiply it by 1.05 because that will increase it by 5%. So that gives us a revised selling price of £173.25. So if we do that, multiplied by the new sales volume, which we've just worked out as 11,000 units, that gives us sales revenue of £1,905,750. So let's enter that in. Excellent. So the next part then is the cost of goods for resale. Now this hasn't changed, and the original cost was £125. So the thing that we do need to just be careful of is that we are now budgeting for 11,000 units rather than the original 10,000. So it will be 11,000 multiplied by £125, which gives us a total of 1,375,000. So let's enter that in. The gross profit then is simply the sales revenue minus the cost of goods for resale. So let's calculate that now. So that gives us a gross profit of £530,750. We then just need to calculate the net profit or loss for the 6 months. So all our overhead figures have been entered in for us. So to calculate the net profit, we simply need to do the gross profit figure that we've just calculated minus the total of these expenses or overheads. So that would be 530,750 minus this 325,000. And that gives us a net profit of £205,750. Hopefully nothing too complex there, so let's move on. With increased production, Mo has asked you to help prepare a capital investment appraisal for a new item of machinery for the manufacturing department. The machinery will have an initial cost of £165,000 and is expected to be sold for scrap in year 3 for £30,000. So in the most simple terms, we're going to buy this for £165,000 and sell it for £30,000 in year 3. He has provided the following information to assist you. and we have 3 years worth of forecast profits or losses and the depreciation amounts. Part B, I then, says complete the following table, rounding numbers to the nearest whole number. So what we have here is a little cash flow statement using discounted cash flows. So what we need to do is enter in the cash flow for each year and then multiply this cash flow by the discount factor to get the discounted cash flow. Now, one of the really important things here where people slip up is they ignore the depreciation entirely and they just enter in the profit or loss. However, what we need to do is add back the depreciation onto the profit figure. They're all profits here, just to say there is no loss. So we'll just refer to this as profit going forward. But we need to add the depreciation back onto this figure. And you might be saying, well, why would we be doing that? Well, initially, when we were calculating the profit or loss, we would have taken out that depreciation as an expense. So we would have deducted that from our income to get our final profit figure. However, on part B, what we're working out here is a cash flow. Now, depreciation isn't a cash expense. It is just an accounting adjustment. So we're purely accounting for that loss on the machinery in terms of the loss of value that we think it's going to drop by, but we're not actually paying any money out. So when we're doing the net cash flow, we don't want to include that depreciation figure within the cash, as I say, because it's not a cash expense. We're not physically paying any money out. So we need to add that back on to the profit figure because originally it would have been taken out as an expense. We would therefore do 64,000, this is in year one, 64,000 plus £50,090 to give us a total cash flow of £114,090. Now we'll do the 3 years worth of cash flows first and then we'll do the discounts. So year 2 would be 63,400 plus 48,350 to give us a net cash flow of 111,750. And then for year 3, it would be 65,800 plus the 36,560. Which would give us 102,360. However, remember that we also have this bit of information up here, which is that the machine will then be sold for scrap in year 3 for 30,000. So we would also have to add that onto our figure. So add on 30,000 would give us 132,360. We can then apply the discount factors to each of these years. So it would be £114,090 multiplied by 0.893. These discount factors, by the way, would always be given to you. It's not something that you would have to work out. And remember, we just need to round these to the nearest whole number. So that would be 101,882. Year 2, 111,750 multiplied by 0.797 to give you £89,065. And then lastly, 132,360 multiplied by 0.712 to give us £94,240. Fantastic. Right, okay, moving on to part II then. Calculate the net present value of the machinery. So to calculate the net present value, all we do is simply add together our discounted cash flows. So we have minus 165,000, and then we add on all our year 1, 2 and 3 to that figure. So let's just do that now. And that gives us a total net present value of 120,187. Right then, moving on to the last part then, which is III. Complete the following sentence. When looking at net present cost, the better project to choose would be the one with the, and we have to choose between the highest or lowest. Well, it would be the lowest. And this is there to try and catch you out because you've just done net present value, and we should know from management accounts costing that the higher the net present value, the better it is. However, for net present cost, you are calculating which of your different projects that you're doing appraisals for gives the lower cost. Okay, obviously the lower the cost is to the business, the better. Okay, so when you're doing net present cost, you ignore all income and you purely focus upon the costs of a project. And the lower it is, the better it is. So that would be lowest. And that wraps up 1.5. Just one more task to go and we will have finished. So let's move on to task 6. So task 6 is worth 13 marks and tests small areas from advanced bookkeeping and final accounts preparation. So it tends to be something on the lines of an extended trial balance, profit or loss, or statement of financial position. So the key is it's to do with preparing financial statements. Right then, let's dive into this last task and have a look what's going on. This task is based on the workplace scenario of new place. Again, sticking with new place. You are working on the accounts for the year ended the 31st December 2017. Your next task is to complete the extended trial balance, which was left unfinished by a person who has since left the business. An extract of this is shown below. Part A, I then, extend the entries for the highlighted items into the appropriate statement of profit or loss or statement of financial position columns in the extract of the extended trial balance shown below. The loss for the year has been calculated correctly as £185,588. Right then, let's start with extending the entries. So what do we have? So we've already done cash and bank because it's been entered here. We've done the purchase ledger control because again, it's been entered into the statement of financial position. Allowance for doubtful debts definitely needs entering. So we have a credit balance, as it will always be a credit balance, the allowance for doubtful debt. And it will always go to the statement of financial position. However, we do have a debit adjustment against it. So what we would do is the credit balance of £2,000 minus the debit entry of £182. And we would then enter that into the statement of financial position. So that comes out to £1,818. Irrecoverable debts has already been entered. However, the inventory, both opening and closing on the same line, does need to be entered. So this does catch a few people out, this one, because we seem to have 3 numbers and it's a little bit confusing. But remember, the closing inventory will be entered into both. So we'll start off with the opening inventory, which will be this debit balance here. And remember, the opening inventory figure goes to the profit or loss. So we can enter that in. If you remember from final accounts prep, it is a cost of sale. So it is a cost to the business against our sales revenue. So that is entered in on the debit side of the statement of profit or loss. The closing inventory figures then are entered into both the statement of profit or loss and the statement of financial position. It is a credit entry within the profit or loss. So let's enter that in. And a debit entry into the statement of financial position. Remember, they are next to each other. Always, that never changes. So the closing inventory will always be next to each other. Not a great way of remembering it. We should remember it for the proper reasons. But, if you're having a mind blank in the exam, just remember that they're next to each other. Okay, it's a debit within the statement of financial position because it is an asset to the business, and it's a credit within the profit or loss because it is a deduction to our cost of sales. Remember that the closing inventory would have been a purchase. Okay, but if you remember from our final accounts preparation unit, when we're preparing the cost of sales, it is opening inventory plus purchases minus closing inventory, because you can't class it as a cost of sale because you still have that inventory. You still own it. You can't class it as a cost of sale if you haven't sold it. Okay, which is why it is a deduction to our cost of sales. So part II then is to insert the loss figure here, this 185,588, into the extended trial balance. Well, if we've made a loss, that would go as a credit to the statement of profit or loss. So let's enter that in, 185,588. That is because if you have a loss, the debit side of your profit or loss will be higher than your credit side, i.e. your expenses will be higher than your income. Remember that the profit or loss then goes in to balance off the two columns. So it would go on the lower side, which in this case, as I said, would be the credit side. It would then be entered into the statement of financial position on the debit side. Okay, so remember, if it's credit to statement of profit or loss, it would be a debit to the statement of financial position. If it was the other way, so if it was a debit to the statement of profit or loss, then it would be a credit to the statement of financial position. In terms of why, if you really want to know, it's because a profit would increase the amount that is owed to the owner, i.e. it would increase the capital account. And to increase the capital account, we would credit it. Now, because they've made a loss, that would actually decrease the amount of money that the business owes back to the owners, and therefore it would be a debit to the capital account, which lowers that amount down. However, if that's a little bit confusing at this stage, I wouldn't worry too much about it. Just for now, please remember that it will be the opposite to whatever you've put into the profit or loss. Right, moving down then. Later in the day, you receive an email from Mo, an excerpt of which is below. We have received an invoice from Wright & Sons Limited for rent for the storage unit. The invoice is dated the 13th of February 2018 and relates to the quarter ended 31st of January 2018. The total of this invoice is £42,000. Please could you complete a journal for the adjustment to last year's figures, which will need to take place in regard to this invoice, and calculate the revised profit or loss for the year ended the 31st of December 2017 following this adjustment. You do not need to amend the extended trial balance. So all that's saying is we don't need to make any adjustments to this above. B, part I, complete the journal, including the narrative, to the account for the adjustment that Mo has requested. Show your answers to the nearest whole pound. The first thing that I would look at here is dates. So this invoice was received after the year end, but it relates to part of the year that we've been working on, which means we have an accrual. So the two accounts that will be involved are rent, because it relates to rent, so we can type in there rent, and accrued expenses, because it is an expense to the business. The next part to work out is the amount, and this is where the dates become absolutely essential. So our year end is the 31st of December 2017. it says the invoice is dated the 31st of February. Don't need to worry too much about that. But the next part says it relates to the quarter ended the 31st of January 2018. So quarter ended is going to be for 3 months, leading up to the 31st of January. So that's going to be November, December, and January. Now, if our year end is December, what we're saying is that we need to include the amounts relating to November and December 2017 in the previous year's accounts. So they've not been included at this moment in time. Okay, we know that because the invoice was received after the year end. So we know we've not included them up to this point. But we do need to include them. So we need to work out the amount for November and December and include those using a journal, as we're doing now, into our year-end accounts. The amount it states on the invoice is £42,000. And because it relates to a quarter, what we would do is we would divide that by 3 to get the monthly amount, and we would multiply it by 2 because we want to include 2 months worth within our year-end figures. So we do 42,000 divided by 3 to give you a monthly amount of 14,000 and multiplied by 2 to give you 2 months worth, which is 28,000. So the figures for November and December need to be included. So we would debit the rent for 28,000, increasing the rent amount for the year ended the 31st of December 2017, and we would credit the accrued expenses for 28,000. And this is there to show that we owe that money. We owe that 28,000 to our supplier because the accrued expenses account is a liability. So to increase it, we would credit it. The narrative just now needs to be a brief explanation. So I would go with something on the lines of rent related to storage unit for the months November and December. So that covers off part BI. So the very last task then, it says, following the input of this journal, calculate the revised profit or loss for the year ended the 31st of December 2017. Use a minus sign to indicate a loss. Well, we had already made a loss of 185,588. Now with this journal, what we've actually done is we have increased our expenses. So it's going to actually further increase that loss. So if it's 185,588, we would increase that because we've increased our expenses by a further £28,000, which would give us a new loss figure of minus, because it says use a minus to indicate a loss, £213,588. Brilliant, and that covers off the Advanced Synoptic. So hopefully you found these 2 videos useful for helping you prepare for your Synoptic exam. I know it's one that people panic about because it covers the majority of what you've learned at level 3, but I honestly do think there's nothing too difficult in here. You know, look back over prior mock exams, not just for the Synoptic, but for the other units, so advanced bookkeeping, final accounts prep, management accounts, costing, and that will really help with your preparation for this exam. But again, I hope you found these videos useful in helping you to prepare, and if you have, if you could drop the video a like and subscribe to the channel, it would be much appreciated. Thank you very much for watching, and I will catch you in the next video.